What's going on, traders? It's going to be a quick video. It's been a really interesting day. So I'm going to knock this out and I'm going to give you guys my ideas for what's going to happen within the next few trading weeks. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So today, not today, but yesterday and today, actually, we ended up getting two alerts from our Discord bot showing us that institutions are in VIX puts with a strike of 21 and June 18th. Now, this is bullish for the market, obviously, because the market moves inverse of the VIX. And then if we check our bullseye tab here, we got another alert today at 12:06 Eastern time, where they are pretty much showing that they are also, they're in VIX puts with the expiration of May 21st. And as you guys can see, it has a confidence of 57%. I like the confidence level to be over 60%, but the premiums are at 249K. And so if we look at the VIX here, we see that we're forming a falling wedge pattern. Let's actually zoom in here. And so we're on a 4-hour time frame, and again, we are forming this falling wedge pattern. And so the question is, well, is this dump this afternoon that we saw, is it the dump of all dumps? Is this what I've been talking about? Is this the part where we head to new lows or make a double bottom? And I don't think we're quite there yet. In fact, I do think that it's very much possible that we see another move down on the VIX, and obviously the market will move inverse of that. So right now what I'm looking at is if we are going to continue to dump heading into tomorrow, right? I imagine the VIX is going to head back towards 25. Highest I'm looking at is about 26, right where these bearish wicks are, and then we head back towards the downside and start heading towards that 21 level. Right now, lowest we could go is about 20.7, right where this bullish wick is, and then from there I imagine that this falling wedge is going to actually play out, and from there we'll start seeing a breakout towards the upside, and then obviously the market would do inverse of that. Right, so if we look at the SPY here, right, and in order to give you guys a much better idea on what I'm talking about, we're looking at the SPY here, and I imagine that we're going to head towards this gap fill all the way at around, what is it, 55, 58, 55, 56. Let's go to the daily time frame. Yeah, here it is. So 55, 56 is what I'm looking at, and so I imagine if we're going to continue towards the downside heading into tomorrow, and that's not guaranteed, but if we are, I imagine this is where we're going to head towards, where we hit that 55, 555 level, 556 level, and then we head back towards the upside, right? And so if we're going to mark our key levels here, or pay attention to our key levels here, obviously our key level is 568. We had a very hard time getting above that level, and then towards the downside you're looking at about 555.3, 556. And so while I do think the market is going to create another low, I don't think this drop that we just witnessed heading into close, which really wasn't significant enough for us to believe that a new low is coming or anything, but I don't believe this drop that we just witnessed is the final drop. I do think it's very possible that we bounce off 555 on the SPY, and it's no guarantee we're heading towards 555, but if we manage to give up 560, then I imagine we're going to head towards 555, fill this gap. And then from there, we create enough space back towards the upside where we can hit 570. Highest we can be looking at is about 575 before heading back towards the downside, right? And so we talked about this in the last video. We look at the weekly time frame here, right? And if we're talking about a move towards 575 or even 570, we're pretty much retesting the bottom of this double top neckline right here, right? So you have your top here and another top here, and then your neckline is crazy enough at 575. And so if we go back to the 4-hour time frame, again, if we hit 555 heading into tomorrow, very much possible, but it's not guaranteed. But if we do manage to hit 555 heading into tomorrow, I do imagine that we're just simply going to create space back towards the upside, and then we hit that level of 570, possibly head as high as 575 and hit that double top neckline. And so the same goes for the triple Qs, right? So we look at the daily time frame for the triple Qs here, and I imagine where we're trying to go heading in, where we're trying to go heading into tomorrow is around this gap fill. Come on, work with me. Is around this gap fill at around 475 before possibly heading back towards the upside, and that will create enough space for us to head all the way as high as possibly 499, 500 before rejecting back towards the downside. Now, I'm not saying we have to hit exactly 500. We can go a little higher than 500. And so if we look at the weekly time frame on the triple Qs, you're looking at a move all the way towards 505, 504, right at the bottom of this rising wedge. So what I'm saying is that This drop heading into close could have simply been a liquidity grab because we were having a hard time breaking above 568 on the spot. And what do I tell you guys all the time? Right? Anytime the SPY or the triple Qs is having a hard time, I guess any stock is having a hard time breaking a key level, one side or the other is going to give up. And in this case, bulls ended up giving up and bears stepped in, right? And so I imagine bulls are going to look for an opportunity to grab liquidity in order to break that 568 level. And then from there, we had as high as 575, possibly even 580 on the spot. Right. And so all of this correlates with my thought process when it comes to the VIX and how those puts are coming in for the VIX. Those 21 strike puts are coming in for the VIX. And so if the VIX does head a little bit higher towards the upside, I imagine it's going to hit 25, 26 before heading back towards the downside. Take out this, $21 target, 21 strike target, 20.7 target, and then from there, this falling wedge will play out. We break out this falling wedge, and then from there, you start filling these gaps towards the upside. So, in conclusion, guys, I don't think this drop is the actual drop. I could be wrong. By all means, I would love for it to be the drop towards the new lows or towards that double bottom that we talked about in the last video, but I don't think we're quite there yet. I think that we have one more pump towards the upside, and then from there, we'll see what happens, right? So this is the move that I'm looking at. Boom. And then from there, it's all downhill. So that's what I'm looking at right now. In the Discord, we did Microsoft calls, made a decent amount of money on that. So congratulations to Discord members on that play. And yeah, we'll see what's going to happen for the rest of the week. I won't be making a video until Wednesday close, simply because FOMC is Wednesday, and I don't think it makes sense to just keep making videos heading into FOMC. So it's best to wait to see what happens heading into FOMC. Historically, the market pumps into these type of events. So I do imagine that if tomorrow we end up red, then towards the end of the day we'll most likely end up green, just based off history. And then the day of FOMC will continue to pump, and then we'll see what happens heading into the FOMC press conference. But that's all I have for this video, guys. Hopefully you got something out of it. Let me know what you guys think in the comments below, and I will see you guys Wednesday. Until the next video, traders, have a good one.